Hello, everyone. This is Sasha with the LTRC. Thank you for joining us for 3 critical reasons to stop using QuickBooks at your law firm with our sponsor, CosmoLex, as part of the LTRC Industry Insights series held every Wednesday. Our speaker today is Erica Bursler. Erica is the Vice President of CosmoLex, developers of the only fully integrated case management, billing, and complete accounting system specifically designed for law offices. Erica's degree is in business administration, and she has nearly a decade of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica is passionate about helping legal professionals improve the way their law firms run, and she has given numerous presentations across North America on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance to help spread her knowledge. Thank you all for joining us. We'll now begin the webinar.
Great, thank you so much and welcome everyone. I appreciate you joining me on this session today. So as mentioned, we're going to talk a bit about accounting. Accounting tends to not be the most fun of topics, but it is a very important one because you're running a business. Every law firm, of course, at the end of the day is a business. And we'll talk a bit about the different functions in accounting. You may or may not be doing accounting yourself in your firm. We'll talk about that a bit, and then some of the challenges that some may face. So at the very start, we're going to take a little bit of time just to define what legal accounting is. I think by understanding what accounting is for law firms specifically, it really is the foundation for understanding the struggles that law firms ultimately face. And a lot of it ends up tying all together. I'm sure most of you on the call are not bookkeepers yourself, so it would be a really good exercise to review. Then we'll talk about 3 critical reasons to stop using QuickBooks. Now, this is not unique to QuickBooks. What we're going to talk about today is really for any generic accounting tool. QuickBooks just happens to be the most widely known and widely used of those softwares. So throughout my career, I would say within the last 10 years, I've been in legal technology. I've spoken to hundreds of law firms about their current accounting setup and the struggles that they are experiencing. And many of you will likely be experiencing the same struggles, or you're considering using these types of tools, and it's something you never even thought of. And then lastly, we'll talk about what to look for in an accounting tool. So like I said, QuickBooks really is the industry leader when it comes to small business accounting. But for law firms, it really isn't the only option. There are a selection of practice management tools which offer all different types of accounting functions. So we'll talk about what to look for, what's important to you, and that can factor into the types of tools that you choose to use down the line. All right, so when we talk about legal accounting, we want to first talk about the general piece of it, which is what really every business needs to focus on. That's business accounting. So that's your normal tracking of your firm expenses or your business costs, your overhead, reconciling your bank accounts, and doing your annual tax reporting. That's pretty generic, fairly straightforward, and really any business that is doing a tax filing, that is an actual entity, has to do the normal business accounting activities. Another part of legal accounting, though, is matter accounting. This is something increasingly unique to law firms. No other business really needs to worry about a matter and all the different components that come along with that, which are matter costs, so those costs that you pay on behalf of your client that have to be reimbursed, trust ledgers, so all of trust accounting comes into the loop there, which is, of course, very unique to how law firms operate, and payment allocations. We'll talk a bit about how your invoices get paid, how different parties or lawyers get a portion of that as well. And last is compliance, and this actually impacts both of these. And this is where law firms tend to need to spend a little bit more time and a little more attention to make sure that how you're doing all of this accounting is in the realm of compliance. You are going to have trust audits, you have legal specific requirements, not just for a law firm in general, but maybe for your specific practice area. You know, how you do your billing or how you earn your income may be something that you need to keep in mind when doing your accounting. So all those unique requirements are important, and I will remind you that compliance is the responsibility of the law firm, not the bookkeeper, which may sound counterintuitive, but your license, any issues with your license and whether it should be an issue or not in an audit is you. That's your responsibility as a firm. So I think very often we give bookkeepers a little bit too much control. It's great to outsource. I am all for outsourcing, but you also need to make sure that those activities are being done properly. Okay, so with that, we're going to go ahead and launch an attendee poll. So I'm curious to see those that are in attendance today, what tool do you or your staff primarily use? You might use a combination of things, but primarily to manage your firm's accounting. So we're going to go ahead and launch that. If everybody could respond, I'd appreciate it. Our options here, of course, are pen and paper. Maybe you keep manual written ledgers, spreadsheets like Excel, a generic program like QuickBooks Zero, QuickBooks Online, or maybe a legal practice management tool that includes accounting. Examples are PC Law or CosmoLex, or do you have no idea? Your bookkeeper does it, you kind of stay hands off, and you're not quite sure. There they are. So definitely the lead are those who use a generic accounting tool like QuickBooks, that's at 62%. Closely followed by spreadsheets. So that often in those situations are, kind of your own homegrown system and way of doing things. So we'll talk about that as well. Excellent. Okay, well, thank you everybody for participating in the poll today. All right, so that'll kind of help me to kind of direct the presentation as well, because I know many of you are already using a tool like QuickBooks. So let's dive into the 3 reasons why this may be a challenge or challenges that you may be facing to keep in mind. The first is dangers of system flexibility. Now, tools like QuickBooks are known for the flexibility, and it's actually one of the main reasons why bookkeepers and accountants favor it so much, because they can kind of do whatever they want. They make the rules, they can switch things around, they could do things differently if they'd like to. However, flexibility is really the exact opposite of what you want when you're dealing with compliance. The more options you have, the more mistakes can happen, especially if you're being held to a certain standard. So let's talk about some of the challenges that can happen with a flexible system. The first is a lot of this will come down to trust accounting. Trust accounting is the area that holds the most compliance for you and your firm's financials. So one of the biggest challenges is trust activity that is not associated to a matter. In anything you do with the trust account, you have to have a matter assigned to it. But a generic accounting tool does not have any concept of matter. It's not going to care if you receive money in and don't assign it to anybody, or take money out and don't assign it to anybody. So you could essentially end up with a pool of unassigned funds. And if the books are not being handled properly, reviewed, reconciled, and caught, then you're going to end up in a situation where you actually don't know whose money that is at the end of the day, which can be a really big compliance concern. Another is overdrafts. One of the first rules of trust accounting is, well, the first is to have everything associated to a matter. Probably rule number 2 would be no ledger overdrafts. You want to make sure that whatever funds that you have for your particular clients are what's reserved for them. In tools like QuickBooks, a trust account is handled like any other bank account. You can take as much money out as you want, put as much money in as you want, and that will lead to overdrafts. So if you're not paying attention to what that balance is, you can absolutely take more money than what's available, and you risk having that negative amount. And keep in mind, if you overdraft, even if you replace that money the next day, it's still going to show up on your reporting. So you want to avoid that as much as possible. Incorrect GL posting. So by GL, we're referring to the general ledger. Those are the different accounts that you have on your books, essentially. That is the heart of the accounting books. And if you have the ability to assign any account that you want, then you can assign any account that you want. So if you are receiving trust funds, you can essentially assign it to an income account if you want to, when it's not income. Or how are client costs accounts handled, or how is fee income handled? Sometimes having the run of the gamut and all 100 chart of accounts for your choosing can result in the wrong ones being chosen at the end of the day. And having to manually interfere or come up with some workarounds for matter-specific requirements. Like we said, there's no real concept for matter when you're going outside the realm of legal-specific tools. So if you have specific setup percentages, rates, settings for matters, those are usually not going to come into play or just not available. And you need to find out ways to hopefully track that information. The second item that we're going to talk about is lack of legal specific functionality. So tools like QuickBooks, Xero, they're all generic accounting tools, like I said. They purposely position themselves as industry agnostic because they want to widen their market. They're not looking to be in a specific industry. So with that, it is important to understand what's unique about law firms and why these specific tools may not cater to that. So here's a few legal accounting needs, what your firm specifically may need. The first is matter-centric record keeping. So I talked about this a little bit before, is that these tools have no concept of a matter or client matter relationship. It is a customer. And while billing can be assigned to a customer, not much else can. So if you're dealing with the settings on a particular matter, more so default settings, if you think about even your practice management software, I'm sure many of you, even those who use QuickBooks, are likely using some sort of legal billing tool. All the different settings that come with the matter, there's quite a lot. So those often can't be captured. Trust ledgers are matter specific, but also the 365, that 360 degree view of matter details. What all is going on with this file? You may see one piece of it, which is probably the income that's brought in, but what about everything else and how are you able to get that picture together? The second on this list is trust account safeguards. So this goes into the flexibility part. Trust accounting is often the main reason why law firms struggle with generic tools because it is very unique to law practices. So if there's nothing in place to prevent the items I mentioned before, which is matter-specific ledgers, no ledger overdrafts, and also compliance reporting, which is the next point. There are specific reports you need to provide during a trust audit. One of which is an accurate trust listing, which is all the different trust accounts and what they have, or trust matters, I should say, and what they have in the trust account. The key word there is accurate, and we'll talk a little bit in a bit about why those trust listings, even though they're in QuickBooks and you can see the matters and their amounts, why they could possibly not be accurate. And then three-way reconciliation. If you're in an audit, almost every bar association asks for a three-way check, which is your bank balance, your book balance across all of your client ledgers. That three-way check makes sure that everything is balanced out with your client cards as well as what's going on in the bank itself. GL account controls. This is where that flexibility comes into play. Like I said, there are unique accounts for law firms. A lot of people don't realize how or know how to set up trust liability accounts or how to set up different fee income accounts or how to set up client cost accounts. And another point I'd like to kind of fit in here is when it comes to a bookkeeper or an accountant that you're working with, you want to make sure, even if they have 20, 30 years of experience, do they have experience with law firms? That is very important because they may understand, using a general ledger, reconciling, tax reporting, forwards and backwards. But if they've never worked with a law firm, they likely have no idea about trust compliance or just the legal specific requirements that may come with that. So do think about the staff that you're currently using, or if you're looking for a bookkeeper, there are many bookkeeping professionals that actually specialize in law firm compliance. Proper income allocation. So this comes to when your account or when you're receiving money into your account, so an invoice payment, let's say, per legal accounting guidelines, fees should be last. So if you are, let's say you have a $1,000 invoice and you have, we'll make it real simple, half and half. $500 is costs, $500 is fee. All of those costs should be covered before you start earning fee. In generic tools, it's proportional. So if you have a partial payment of $250, half of that $250 is going to go towards fee, and half of that $250 is going to go towards your costs. So you're essentially earning fee before your costs are covered. That is the default. Really, the only way to change that, my understanding, is to do like a journal entry or some sort of change after the fact. But it really only comes to play with partial payments. So if you're using QuickBooks, ask your bookkeeper, how are we recording our partial payments? How do we ensure that fee is being recorded last? And then fee distribution. Many firms have those internal formulas for bonuses or compensation based on the fee that they bring in. Whether you're an originator, responsible, a timekeeper, there's all different levels. This is increasingly important in law firms because it's a sales tool essentially. It's a motivational tool for your team, your associates, to bring in more fee. But it's exceptionally cumbersome in a generic program because there's no way to capture who these parties are, what matters they're on, what percentages they get, because they may get a different percentage on one file than another. And is it a percentage of all the money that comes in, or is it just a percentage of the work that I do? Those matter. I've spoken to so many firms about their particular formula, and they vary across the board. So if you have this type of setup, you may not be aware at all as to how your bookkeeper is doing it. Those that I have spoken with in the past said that they basically export their basic fee reporting to Excel and kind of figure it out from there. They figure out who was on what files, what percentage they can get, and they're doing manual calculations in Excel to come up with those distributions. This needs to be done usually every pay period. You may do it quarterly instead, but most of the time it's every pay period. So that could be every 2 weeks that this manual work is being done. And of course, it could leave room for error as well. So if you have a fee distribution model in your firm, talk with your bookkeeper, figure out how that's actually being handled. Okay, and our next item is actually one that most people might not think about. So when you're working in with QuickBooks, it is usually specifically for accounting, though there's billing functionality in QuickBooks as well. Most of the time it is specific to accounting. So what about the other functions of your firm? How are they interacting with that accounting? So here's a few areas on the left that are kind of the business areas of a law practice. You have your legal time and billing, which of course is your invoices, your payments, your time tracking, your business accounting, which is that big chunk of activities that I said QuickBooks does. You're doing your reconciling, printing of your checks, reporting, the trust account, which is all of that compliance, but also your day-to-day activities, all the different tasks that I'm doing, the different events, the documents that I'm saving, my email communications. And you might be thinking, well, why does that have anything to do with my accounting software? Well, the biggest struggle actually happens with the billing. So all of these activities that you do day in and day out are billing activities. Usually you're going to, maybe not all of your files, but most of your files, you're going to bill for the time that you spend. So documents, emails, calendar tasks, those are all usually billable activities. So they factor into your invoices. So that's first. How do they get into your invoices and ensure they get billed? Then, if you are using a legal specific tool for your billing, which many firms do, how is that income, which gets earned on those, being recorded in the accounting system? This is what we call a legal billing and accounting gap. Okay, so while having separate tools, I know a lot of the time people say, yes, it's double entry. Yes, it may take me some more time, but I'm okay with that. Well, there's one thing about time, but I'm going to throw in that very cliche saying of time is money. So just because you have the time doesn't mean you should be spending it on certain things. Maybe there are better ways to spend that time, but also the accuracy. When you have information that's being stored in duplicate in 2 different systems, that is when your accuracy can be sacrificed. So this is the point that I made earlier. Often, and I'm sure many of you are the same, QuickBooks does have billing functionality, but I do think the legal requirements for billing are so large. There's so many unique setups and requirements that most law firms turn to a legal specific billing tool. That's the most common scenario that I see. So it will be separate from your accounting in that case. So when you're talking about billing and accounting, what areas cross over? These are the main areas. So we're going to use the example of you're using a tool, could be a practice management tool, could be a legal billing tool that is doing your invoicing. That is where you're going to receive payments as well. These 3 points are where there will be double entry and duplicate records on. One is matter costs. So when you're paying a cost out of pocket, let's say a filing fee, and I'm going to court to pay this filing fee paid by credit card, that will likely get recorded in your accounting system at some point, or hopefully does, as a client expense. But also needs to be put in your billing software for reimbursement. If that step is missed, then it will not be billed to your client and it will not be reimbursed. And that is actually a huge hit to the bottom line. A lot of law firms know that they're dropping those costs, but they're not keeping an eye on it close enough to know how much. Could be hundreds, could be thousands of dollars. And that happens because of that disconnected setup. Invoice payments. If you have an invoice in your billing system, we'll use that example again, $1,000. I receive, I'll say it's a payment in full. I receive the full $1,000 into my billing tool. Well, $500 of that is fee and $500 of that is cost. My billing software doesn't care what it is from an accounting perspective. It just wants to notate that the balance is now 0 and I receive this payment on this date. Then also in the accounting software, there needs to be an entry of, okay, I received $1,000. How much of that is fee? How much is that it costs? Assign it to the appropriate GL accounts. Gets even more complicated if it is involving retainers. So you have money in the trust account, your accounting software will reflect what that matter has, but also the billing account will. So when you have retainers, you are tracking how much is available to be earned in the future. So if I have a particular file that has $2,000 in trust and I have that $1,000 invoice, I could take $1,000 from trust and pay that invoice. Simple. On the back end though, from an accounting perspective, that trust money is held as a liability to the firm. So it needs to now move from liabilities over to either income, costs, or whatever happens. All of those steps have to happen with something as simple as a invoice payment. And if they're in two separate systems, the likelihood of them being incorrect or not in sync are very high. When I talk to people that have two separate systems and let's say migrating data, because I've had those conversations too, and I'll say, well, what about your retainers? Are your retainers in your billing software, your accounting software, or both? And they often say, both. I'm managing them in two places. Okay, do they match? The answer is always no. And I'd say, well, why don't they match? And it's usually just laziness or a lack of check and balances or just a lack of confidence in their current process. So I say, you know what? Your most accurate will likely be wherever you're reconciling, which is your accounting tool. But keep in mind, if you have, let's say in the accounting tool, you have $2,000 for somebody, and in the billing tool, you have a $3,000 invoice, and you're tracking an inaccurate amount, you may think you have more than what's actually available, which can result in an overdraft on your trust account without realizing it. So there's a lot of little room for error that can definitely take place that you want to be aware of. And again, you may or may not be doing this yourself. You may have somebody else who's taking care of these tasks. So this at least will open up a conversation about how is this being done and how are these items being caught. And checks and balances to verify. Like I said, we put a lot of responsibility on our bookkeepers or our accounting staff. There still needs to be a double check. Somebody needs to make sure that, you know, each month not only reconciling, but verifying the client ledgers, verifying the billing and accounting system, verifying the reporting, just to make sure that everything's correct. And that's more so important when you have those systems that are separate. So you may be thinking, well, okay, separate tools, I'll just set up an integration. There are syncs that QuickBooks has with other applications out there, which is correct. The first thing is most integrations today are with QuickBooks Online. So I want to make sure that is clear. QuickBooks Online is the online version or cloud version of QuickBooks Desktop, but it is not the same. There is different functionality. You have a very robust accounting tool, in my opinion, QuickBooks Desktop, and a more simplified online tool. So QuickBooks Online is great because it's modern, it has simple functionality, it is probably easier to use because it is more simplified, but don't assume that whatever functionality you're using in QuickBooks Desktop will be available in QuickBooks Online. So if you're looking to do that transition, definitely do your research and make sure that the functionality you need is there. But that is where the integrations are definitely more I guess, I don't want to say possible, but most of the cloud tools are integrating with other cloud tools. So if you're looking at a cloud practice management tool, et cetera, they usually are integrating with QuickBooks Online. So something to keep in mind. You want to know what information is shared between those two tools. So is it the invoice amount? Is it the payment amount? Is it the trust retainers? Is it the, like, what is actually, don't assume a sync, and this goes for any tool, not just these tools. Any integration or sync, you need to understand what information is actually being shared from product A to product B, because it may or may not include what you need. And then you need to think about, is it bidirectional? So if I'm sharing information from product A to, or software A to software B, what happens if in software B I'm reconciling, I find a mistake, and I fix that mistake? Will it go back to the first program? The answer is often no. Pretty much all the practice management tools that I know that integrate with QuickBooks, they're all one-directional. So you want to, again, ask those questions and understand how those syncs are set up. And what about when the sync fails? This is not a calendar sync. This is not a task sync. This is your firm financials. When a sync fails, your information ends up incorrect. How do you catch that sync when it fails? How do you fix it? How do you rectify it? I actually know many bookkeepers that have a practice management tool that syncs with QuickBooks and they don't even use it because they've had a lot of issues with that in the past. So if you're considering an integration and a sync, absolutely consider it, but keep all of these things in mind. All right, and lastly is, all right, well, 60-something% of you are using QuickBooks. If you're even considering other options, what to look for. So there is no legal specific accounting standalone product. There's no legal specific version of QuickBooks. It just doesn't exist. So the route you want to take is looking at practice management tools. There are many practice management tools available. Some include accounting, some do not. Some examples of those that include accounting are PC Law, Tabs 3, Amicus, CosmoLex. They all include accounting within, and typically you can, but you typically don't integrate it with an outside tool. So that's something that you could also look into. So you want to ensure you have matter-centric record keeping for all of your financials, because it's, in my mind, there's two levels to law firm accounting. The firm, you know, how your business is running, your expenses, your income, and then there's the matter. What's happening on this file, the cost, the trust ledgers, the invoice payments, and both need to be well organized. Legal specific functionality that your firm requires. So we went through a few items today. Some may be more relevant to you than others. Some I may not have covered that are very specific to your type of practice. Want to make sure you keep those in your list of requirements. Trust accounting safeguards. You want to ensure that whatever tool you're using, there are standalone, I believe, trust accounting tools, but again, the more tools you have, the more division you have. So a lot of these tools, obviously if they have accounting, they do have trust accounting if they're legal specific. What are those safeguards? What is it preventing? What type of reporting does it provide? And that's the reporting piece. So not just, I mean, we could definitely even go past that with compliance, billing reporting, the productivity reporting that you need, your profit and loss balance sheet, your general reporting reports, and also the trust reports. So there's a whole list of items that really keep in mind what is required in an audit for your firm and ensure that you can produce that reporting. And tight communication between billing and accounting. I can't stress it enough. We talked about a lot of the different struggles that can happen with duplicate entry, with if mistakes happen, which they do, and you're fixing them, how does that reflect back, so on and so forth. So you just want to keep that as tight as possible. Of course, tools that include both your billing and accounting, that will be the tightest connection that you can get. And that wraps up our topic today. I do want to put out here for anybody who is unfamiliar with CosmoLex, we are a fully cloud-based practice management software that also includes your billing, your business accounting, and your trust accounting. So if you are looking for an option with that legal accounting built in, feel free to reach out. We'd be happy to talk with you further.